Hello and welcome to Emerald Financial Small Cap Watch. I'm Christy Carter and today I'm joined by Wesley Coote, CEO of allied healthcare company Healthia. Welcome, Wes.
Hi, Christy. Thanks for having me.
Wes, it's been a busy year for Healthia and we've seen some big numbers both financially and operationally. For those investors not familiar with Healthia, can you give us a recap of the company?
Yeah, thanks, Christy. Look, Healthia operates in the allied health space. Our focus is predominantly on physio, podiatry, optical, and hand therapy businesses. We've grown our portfolio to over 300 sites, which included 95 new sites in FY22, or an increase of about 44% over the prior year. In the year, we delivered over 200 million of revenue and 24.5 million of EBITDA. So during that period, we did have some effects from COVID through sick leave and staff absenteeism and patient cancellations. So that put a bit of noise in the numbers. So we've come out and we've recently confirmed that in FY23, we expect on the current portfolio to deliver more than 40 million of underlying EBITDA for the year.
Last time we heard from you, Healthia had just announced a major acquisition. Can you tell us how the integration of that business has gone since?
Yeah, look, so we recently did the acquisition of 63 back in motion clinics. So part of the 95 I mentioned before, clinics that we acquired in 22 were these 63 clinics. We settled them between November and December of last year before we hit the heights of the pandemic, where we saw our staff absenteeism increase and our patient cancellations. It also meant we had to integrate the businesses from afar, and we didn't have the opportunity to really get in front of them as much as we would have liked to. But now we've seen trading conditions and things return a little bit more to normal. Our integration plan has progressed really, really well, and it's pleasing to say it's nearly done. And in the last 4 months, we've seen trading really stabilise across the whole group, including these 63 back in motion clinics. It's come back to close to pre-pandemic normal trading. And it's pleasing that we can come out and reconfirm that guidance of 40 million of underlying EBITDA for FY23.
It's great to hear things are reverting back to pre-pandemic conditions for you. Wes, Healthia now has more than 300 allied health businesses in its network. Can you talk us through your plans there and what you're targeting in the years ahead?
Yeah, so look, as I mentioned, we operate in that allied health space. They're very highly fragmented industries that we operate in. At the moment, we've seen a large influx of inbound calls from vendors who want to partner with an organisation that's not only ethical, but can provide the support to them in this post-pandemic world where there's a lot of disruptions. So we provide that back-end support around finance and marketing and IT and the like. So what we've done is we've come out and we've also reconfirmed that we will expect to deliver acquisitions of around $20 million worth of capex for the year. So last week we announced that we've already signed up and expect to sell 12 or 9 million purchase price of that 20 million by the end of October. We don't see this run rate slowing down given the fragmented nature of the business, and we're well positioned to hit our goal, which is to be Australia's and New Zealand's most leading and diversified allied health business.
Wes, thank you so much for your insight into Healthia's expansion strategy. There's definitely a lot on the horizon for Healthia. We will continue to follow your progress and hopefully hear from you again soon.
It was my pleasure, Christy, and I hope to see you soon. Thank you.